Resurgent India Knowledge Series presents virtual session on bridging the credit gap for MSMEs. Mr. K.K. Gupta, Director, Resurgent India Limited. Mr. K.K. Gupta is currently associated with Resurgent India Limited as Director, handling all kind of financial worries of the clients. Core competence in the field of corporate finance and management consultancy, and believes in providing complete and hassle-free solutions to the clients at Resurgent India. It is a knowledge-oriented, full-service investment bank and financial consultancy firm that provides service in area of debt, equity and transaction advisory. Dr. Fareed Ahmad, former Executive Director, Punjab and Sindh Bank. Dr. Fareed Ahmad, former Executive Director from Punjab and Sindh Bank and superannuated in July 2020 after entering a service of more than 37 years of service in two public sector banks. Prior to joining Punjab and Sindh Bank, he was with Corporation Bank and his last position was Circle General Manager. Mr. Ashok Kumar Pathak, FRM, Chief General Manager, Bank of India. Mr. Ashok Kumar Pathak is the Chief General Manager, Retail, Agriculture, MSME, and Financial Inclusion, at Bank of India. He has worked with the bank since 1992. His qualifications include KEB, an Advanced Management Program in Banking and Finance, Financial Risk Manager Program, FRM, Part 1, and IBDAT certification in IT and Cyber Security for Senior Management. Dr. C.A. Chaitanya Shah, CEO, Chaitanya Shah and Company. Dr. C.A. Chaitanya Shah is a chartered cost accountant with Masters in Finance. Completed PhD in 2016 in SME-General and Financial Management. He has worked for 20 years in large industries, Graphite India and Unichem Laboratories as Vice President, F, and Senior Vice President. As part of top management team, he got exposure to various corporate issues from management perspective. Mr. Rajesh Kumar Singh, General Manager, Bank of Maharashtra. Mr. Rajesh Kumar Singh joined bank as an specialist officer in the year 1990. He has very vast experience in banking and has worked in almost all the important domain of its. He has worked as a branch head in various branches across Western North India, South India, and Central India. He has also worked in administrative offices across India in various verticals of the bank and worked as a deputy zonal head of the national capital.
Sorry, it went to unmute. So, my friends, this is our 196th webinar under the series of Resurgent India. We also doing the webinar under the Association for Financial Advisor of India. So, various topics were discussed. So now, at present, today we are going to discuss a very important topic: how bridging gap in the credit in SME sector can be achieved. So we welcome our eminent speakers, Dr. Fareed Ahmad, Dr. Chaitanya Shah, Mr. Rajesh Kumar Singh, and Mr. Pathak, who are representing the banking sector. So first of all, we are telling you there is a huge gap. Under the leadership of Mr. U.K. Sinha, expert committee assessment was made about the credit gap in SME sector. It is informed that about 20.7 lakh crore there is a gap in credit for SME sector. Although certain SME sector which are placed in the rural areas have not got registrations, and registration is also main problems. So we cannot say anything because about 95% of the rural SME sector are not being registered. This means that their need for more than double the rates of disbursement credit to SME sector. When we are talking about the share of the SME sector to gross value added and GDP, it is coming to 29.2% in 21 or 22. When we are talking about the developed country like China, where there is 150 million SMEs, and 50% of the tax income and 79% of the job creations and 8% of the export. You see that I'm not going to talk about the SME sector importance, because you are also aware that if you are talking about the export or job creations, anything SME sector is playing very important role. Leverage increase to SME sector lead to higher investment in productive assets, thereby driving economic growth and job creations. I think this is a major issue which India is facing when you're talking about the job creations. When you want to invest in the SME sector, definitely job creation will be there. The creators, property rights, informal economy, lack of appropriate accounting records and informations, administrative cost for the bank of lending. Therefore, the decision made by the bank is based on the collateral securities. I think this is a major part because they could not maintain the proper account for that. In order to turn thereby to plug the gaps in credit faced by them, providing credit guarantee by the government 100%. A lot of credit guarantee scheme is there. Because bankers are not confident, if you provide 100% guarantee to the SME sector, to lending institutions, can bridge a gap. I will not touch much because my eminent speaker are with us, who will going to discuss in detail how this gap, which we are talking about, 20.7 lakh crore, which is assessed by the expert committee headed by UK Sinha. So that is a point which we are going to discuss. At the outset, I am requesting our learned, my philosopher, my guide, why I think he is the major aspect, Dr. Fareed Ahmed. So Dr. Fareed Ahmed, which we have already informed you, is well experienced in the banking sector. He was ex-ED of the Punjab Sind Bank, and he is very thorough in respect of the lending norms of the banking sector, especially SME sector. While working in the Punjab and Sind Bank, he turned out the bank. I will not take much time. I am requesting Shri Fareed Ahmed sir. Sir, how the credit gap, which is around 25 lakhs crore rupees, can be bridged? I think this is a major aspect which is main agenda of the meeting is there. As per you, how it can be bridged, sir? I hand over to Mr. Fareed Ahmed, sir. Fareed Ahmed.
Gupta ji, Dr. Chaitanya Shah, Ashok Kumar Pathak ji, and Mr. Rajesh Kumar Singh. A good afternoon to all of you and also to the audience. In fact, to bridge the credit gap for MSMEs in India, a combination of efforts from the government, financial institutions, industries, associations, MSME themselves is required. To address this credit gap, lot of strategies and steps to be implemented. We can discuss some of them, starting from digital lending platforms for providing quicker and more inclusive access to the credit to MSMEs. In fact, use of technology for the purposes of online applications, digital documentation, and to streamline the lending process and reducing the administrative burdens. These are the important things to which through the technology we can use. And simultaneously, the capacity of the banks and other financial institutions to assess and serve the MSEs have to be improved, and through effective training and technology adoption. And one more point is capacity building of MSMEs themselves to improve their business management skills, financial record keeping, and overall operational efficiency. As far as the lending is concerned, till now we are going by the asset-based lending. The focus should be given on the cash flow-based lending, so that it will be easier to assess on the basis of the future cash flow. And there should be a collaboration between industrial associations, chambers of commerce, other private sector players to create joint initiatives to provide particularly the non-financial support to the MSMEs. Anyhow, the financial supports will be taken by the financial institutions. And a networking has to be developed, encouraging the MSMEs to form more and more compact associations or clusters that can collectively negotiate with the lenders for better terms and share resources, and also they can influence on the market prices of the raw material and also the other transport areas. As far as the government is concerned, there should be a continuous review and update of government policies and initiatives, and they should come out with the credit guarantee schemes. No doubt CGTMSE credit guarantee scheme is there with certain restrictions and the limitations. So they have to come out with the new schemes depending upon the situation and also the sector within the MSMEs. And there should be, from the bankers' side, conducting the financial literacy programs, from the government sides, conducting the entrepreneurship development programs to educate and increase the awareness among the MSMEs about available credit programs, government schemes, and also the various financial institutions that cater to the needs of the MSMEs. So, bridging the credit gap for MSMEs requires a comprehensive and collaborative approach that combines financial solutions, capacity building, technology adoption, policy support. It is important to the stakeholders to work together to create an environment in India where MSMEs can access the credit they need to grow and thrive. As it was said that the credit gap was about around 26 lakh crores. In fact, the credit gap for the MSMEs is much more. It is the only addressable gap. So this addressable gap should be bridged as early as possible collectively by all the institutions.
Thank you very much, sir. I think technology, you're talking about the technology and digital documentation. I think important issue what you talk about the cash flow lending and collaborations, comprehensive policy and credit guarantee. I think these are the major aspects we're talking. So there is a point of the supply chain. Whether the supply chain, we are talking about the global supply chain, we are talking about the supply chain, how it can be helpful to the SME sector for bridging the gap.
The supply chain finance can play a very crucial role in accelerating the MSME financing in India by addressing some of the key challenges being faced by these businesses. This supply chain finance can help the MSMEs to escape the vicious circle of low profits, growth stagnancy, and high operational cost. They will enable to have the better access to the diverse financing options at a lower cost. That is very important aspect of the supply chain financing. If you take into some of the benefits or advantages or how it plays a crucial role in MSME development, we can shortlist some of the things. The first is improved cash flow. That is the most important. As I said, it can improve the cash flow of the MSMEs by early payments, to having the access to the early payments for their invoices, enabling them to bridge the cash flow gaps that arise due to the longer payment terms from the buyers. So this improves their working capital position and also provide them with the immediate funds to meet their financial obligations, including the working capital and also the investment in the business growth. Side by side, it reduces the cost of financing because it is providing the access to the financing immediately. Not only that, it will reduces the cost because it will enable them to access the finance at lower interest cost compared to the traditional borrowing options. By leveraging the credit worthiness of the buyer, particularly here, or the supply chain ecosystem itself, the MSMEs can get the benefit from the lower borrowing cost, reducing their overall financing expenses. So the banks or the lenders will depend on the credit worthiness of the buyer. That is most important. So that will help to reduce the lower cost of financing. Then enhanced credit access, especially the MSMEs which are having a limited credit history, are not having, though the amounts required of higher amounts, but they are not having the collateral. They are struggling to secure from the traditional sources of financing. So supply chain mechanism leverages the strength of the buyer's credit rating, it will allow the MSMEs to access financing based on the buyer's reputation and credit worthiness. So this expands their MSMEs access to the credit and increases their chances of obtaining the affordable credit. Not only that, it is also helpful to the banks to mitigate the credit risks because it helps to bridge the credit gap by the lending institutions with tools to manage the credit risk and expand the scope of financing to include the large segments of MSMEs. And because their invoices are being discounted based upon the credit worthiness of the buyers, so the lenders can mitigate the credit risk. And it is also possible in India, we have seen the integration of the technology with the supply chain finance, which improves the processes, reduces the paperwork, and improves the efficiency. The best example is the Trades platform, which is a successful digital supply chain and a digital commercial finance. As we are all aware, the 4 platforms are being operated for undertaking the discounts of invoices of the MSMEs. In fact, since their inception in 2017, though there were 3 platforms, now 4th platform since 2022, they have discounted about 55 lakh invoices involving the amount of 1.42 lakh crores. And in fact, as per the report of the Reserve Bank of India, on an average monthly 35,000 invoices involving the amount of about more than 7,000 crores are being financed through Trades platform. So this is one of the successful example. Not only that, in the recently the Reserve Bank of India to expand the scope of these trades, because to give a fillip to the supply chain mechanism, they have added all the eligible institutions under the factoring regulations as the lenders in the Trades platform, and they have introduced the insurance facilities so as to mitigate the risk, and also they have introduced the secondary market provision secondary market operations provision on the trades platform. So by leveraging the supply chain finance, SMEs can unlock the opportunities for growth, improve cash flow management, access affordable financing, thereby accelerating their overall development and improve the contribution to the economy. This way, the supply chain mechanism will play a very, very important role in bridging the gap of the MSME financing.
Very nicely, excellent, sir, what you have touched about the trade platform. There, I think this is one aspect which is beneficial for the SME sector, that it is without recourse. Once the bill has been discounted,
Correct.
that means risk factor will not be there for the, you can say, who is discounting
MSMEs.
SME sector. I think this is a major aspect where our SME sector should avail, as rightly said Dr. Farid Ahmed, that facility must be availed. That can be bridge the gap also, and immediately money can be available. That too, without any risk factor for further. Till realization nahi hua, so bank should realize from the party. I think that factor can be there. Credit risk is minimum. There is no credit risk, and payment will be on the spot. I think, thank you, sir, very much. I think you have covered very nicely. I will come back to you, sir. So I am coming to Dr. C.A. Chaitanya Shah. Sir, now you listen to our learned friends, Mr. Farid Ahmed, how the bridge of the gap should be there, whether technology, digital, or cash flow lending, or review of the policy by the Reserve Bank of India or the Government of India, and credit guarantee scheme. He has mentioned like this. So, sir, I want a question from the what step can entrepreneur take to enhance the financial management? This is also important aspect, sir, and sustainability of the SME sector, because financial management is the most important aspect for the SME sector, because SME is not keeping a proper record, financial management is not there, one man show is there. So whether he going for production, he going for marketing, or he going for everything. So have any views, sir, Mr. Shah? To suggest our SME sector so they can be benefited, because you are very experienced person for SME sector. So I think I will not find another person except you to guide our SME people. I think, sir, this webinar, more than 1,100 registration is with us. I think people are listening to you over YouTube and other electronic media. I think it will be very useful, because you also come, I think, 1 or 2 webinars. So people were asking me, I think some people must be there today. When Chaitanya Shah, you will be inviting again. I'm really thankful to you, sir, for sparing your valuable time and give a in-depth insight to SME sector, how the financial management can be there, sir. I hand over to Shah, sir. Unmute कीजिए, sir, unmute कर लीजिए.
Good afternoon, Gupta ji. Good afternoon to all my co-panelists, and good afternoon to all the participants. Gupta ji has given a wonderful introduction, and I would be speaking more from the borrower side, that is the MSME side. First and foremost, the numbers. In India, we have total 6.4 crore MSME units, of which, most surprisingly, more than 99.4% are micro units. In order to address them, from the banking sector, if we see, they may not be in a position to fulfill most of the requirement, or rather all the requirements which the bankers would have in terms of lending it to them. That's why government came out with 2 schemes. One is the Mudra scheme, and the other one is Swanidhi Yojana. In Mudra scheme, they have so far disbursed 24 lakh crores, and 8 crores have been given 8 lakh crores have been given to the first time entrepreneurs and 43 lakh street vendors. Now you can imagine they have no credit worthiness, there is no credit record, nothing, they have to be just supported by them. And now the way the economy is poised for a growth of 10% GDP, and as per the estimates and the targets by the government, from 12 crore employment, government wants to take it to 16 crores in the next 2-3 years or 4 years. That's the kind of employment opportunities which people are looking at. Now, in terms of financing, as Gupta ji said, the two things which there are a host of things, but I would focus basically on 2-3 things. One is when we are talking of the SMEs, I'm not talking of the micro units. I'm talking of the SMEs to whom the bankers basically lend the money. And they have to, because the bankers are, answerable. And now even with IBC code, I think the SME sections are also going to be after that. Now, the most important part from the SME lending point of view, few of them are, first is that as Gupta ji mentioned, one has to create a sustainable long-term unit. Then only financing becomes more meaningful. And that is what the bankers would like to have it, along with a sustained growth also. Now for this, over a period of time, I have found 2 to 3 things which are lacking in a big way amongst the entrepreneurs. First is when they go for, their business models are questionable. Whatever business models are there, fundamentally, they really need to do a verification that whether these business models are sustainable in the long term or not. And this is where, if you see in the startup ecosystem, no doubt we are coming out with a lot of successful startups which are becoming unicorn, and we are third in the world today in terms of unicorns. But the failure units, the failure percentage is very high. This is where they really need to have a lot of professional support. They need to go into the details of it. And that is where, when they are starting the business, they need to know that part of it. What is the business model? What is a sound business model? What are the various fundamental checks which they need to have and get it verified? Second thing is that when the SME comes, and when they have to be answerable to the banks, because banks are answerable units, for the SME owners, management skills is a big question. It's a $1 million thing, and that is causing a huge problem. And second part, what my friend, Dr. Farid Ahmed mentioned, the financial literacy, a strong word, their financial literacy is very poor. They don't know exactly what is the type of financial parameters which are required, what is the way the financial management system should be established in the organization. Now, in this context, I will quickly refer to 2 major shifts which have taken place in the context of what Gupta ji mentioned at the beginning, that the financial records are questionable. There is a huge requirement. Lot is desired in terms of maintaining the financial record and the credibility. There have been historical reasons. I will not go into that part. But 2 things that have changed, and that has brought a lot of, I would say, transparency, and it is going to be increasingly be seen in the system. First was when the liberalization and globalization took place. A major shift took place. Earlier, we were basically a supply controlled economy. Supply was controlled to make the profit, and the profit was being made by adjusting to the supply and increasing the selling price. But after liberalization and globalization, what has happened, that Today, you cannot control the supply. There are a lot of people, there is a lot of competition in the market. And therefore, if a business unit has to survive, they have to control their cost, because selling price minus cost is the profit. And selling prices is not in your hand. So you have to control your cost. And this is where a lot of professionalism is required. And the SME owners who is wanting to grow in a big way, they have to ensure that this particular aspect is taken care of. Along with this, over last maybe 10 years, there is a lot of transparency. With GST coming in, all the transactions need to be recorded. Otherwise, you will lose your tax benefits, your compliances, whether it is GST or whether it is income tax. It is all through the digital records. There is offline. There is nothing, faceless assessments are taking place. In view of this, the business houses, businessmen, I personally know of a lot of people who have told me that, Chetan bhai, we are very happy. Earlier, we were reluctant to have transparency and bring everything into the books of accounts. We are very happy now. We are able to devote our time to the business. Now, this is something which is very important, which needs to be understood by these people. Along with this, the management skills. The thing which I have noticed over a period of time, up to a level of, say, 20, 25, 30 crores, the entrepreneurs or the business owner is able to take the business on his or her own shoulder. They manage somehow with all, working maybe 24/7 kind of a thing and manage the business. But moment they have to go beyond 30, 50 crores, the major issue is with respect to managing a team. Rather than working on your own, you have to manage the team. And this team management requires a lot of professionalism. Delegation. Now, delegation is something where they have a huge issue. They don't know how to delegate, how to create a strong system so that the businesses can work. And as a result, I know a number of cases where the business runs between 20 to 40 crores, goes on the higher side to 40 crores, comes back to 20, 30 crores. And then again, and then at some stage, they, the owner is getting into a big issue. Now, these things need to be addressed. Financial literacy, financial management, and the general management areas where they really need to come up with a lot of inputs, business sustainability, how to control the businesses, and management skills are something which is very important. Yes,
Very, very nicely, sir. You have covered everything: sustainability, management skill, and you are also talking about the cost control. And most important issue is teamwork, because one can be managed to delegate the powers to some other person. It requires expertise for that. You cannot delegate because it is small unit. I think these are the aspects where person like you, who are the expert under the delegation or the teamwork or something like that, that can be helpful to us. Sir, major aspect what we are talking about, the challenges being faced by the credit gap. Have any suggestion for the entrepreneur who are listening to you, and how it can be met? How the credit can double, unless you cannot meet it unless you have a double credit, as a expert committee under the head of UK Sinha has mentioned. So have any view on that, sir?
Yes, Taji, most important thing is that business planning and your proper monitoring the growth of the business. See, when you want to avail the credit from the banks, it is very important that you meet all the norms which are laid down by the bank. And if you are able to satisfy those norms through a proper management, through proper growth, because the units which I have seen going them into circles around between 20, 30, 40 crores, they can go to maybe 50 crores and 100 crores. I have seen even units, 1 or 2 units, where they have gone for a very rapid expansion, rapid growth. And along with that, the credit limits also grow up. Their credits also, their limits from the bank grow. My overall feeling is that the situation today is that on one hand, banks have surplus money which they can lend to the MSMEs. But on the other hand, the right type of MSMEs who can really, justify the borrowing and show it with the right performance are not so much in the market. And that is where the lending becomes a big, restriction for the banks. This is where the, MSME owners, SME owners in particular, have to come out with the right kind of, proper business setup, business management, which would really help them to move to the next level, and which will definitely create growth, and the credit availability for them.
Have any suggestion for the banking sector? So from your mind, just like Dr. Frida telling cash flow lending instead of the assets-based lending, have any view to be suggested to the bankers?
My view is very strong. I'm working on it right now, actually.
Okay.
Creating the financial management awareness,
Okay.
effective financial management. What is financial management, why it is required, and how it can be done is something which these MSME or SME owners need to learn, need to understand, and ensure that they are able to put it into practice. And the extension of this is the role of the SME owner himself, how they really need to lead the organization as an owner. Because unfortunately, I have seen in many organizations, they work 2 levels or 3 levels below what they are supposed to be working. Now, this, it may be a little longer route. It may take little effort, little time, but it would certainly create a tremendous amount of managerial skills with the SMEs and SME owners. I very strongly feel about it that they really need to have very good financial management skills as well as the management skills.
Excellent, sir. Excellent, sir. What you are talking about. But lekin I am telling you my experience as a branch manager in a branch where is a rural branch is there. I am talking about in Mandi Govindgarh in Punjab, where more than 300 rolling mills were there under the SME sector. So I at the time I was very young, or 25, 26 years, when I put as a branch manager in that Mandi Govindgarh. So what I am suggesting the entrepreneur, you take the limits as a capital. Don't say, because once you've taken a limit and turnover will go up and definitely a limit will going to increase. You say it is a capital and you have to return back to the banker.
True.
To utilize properly and from out of the profit, you are serving the interest, you are serving the, you feel that installment we have to pay, so that it should become your own capital. Once bank is financing them, you consider them when capital. I think it was going a very long way, because banker also interested to recirculating their funds. They cannot stuck up with that. I think, thank you very much, Dr. Sir. We are now coming to Shri Ashok Kumar Pathak, Chief General Manager, Bank of India. Sir, our free sir is talking about the digital banking. He's talking about the digital things, technology development. And for the unbanked area, I think this NBFC has come to play a very important role for a co-lending. I think all banks have started to do a co-lending for the unbanking sector. So, Mr. Pathak, how your bank, technology aspects, how you are helping the entrepreneurs in unbanked areas, and also in processing the proposal in a fast manner, because now some instruments are already available, where the entrepreneurs can lodge out all the financial data and they can assess, the bank can assess the limit in a very fast manner. Have any view, Mr. Pathak, on site for technology aspects? And what is your suggestion, Mr. Pathak? Pathak, sir.
Yeah, thanks, Gupta sir. Hope I'm audible.
You are audible. You are audible.
Yes.
So,
Please carry on.
yeah, respected panelist, Dr. Farid, Dr. Chetan Shaji, and Mr. Rajesh, my colleague from Bank of Maharashtra, and respected audience. So, Gupta sir, I'll take your question. I mean, in a way, I mean, let's take, I mean, the use of digital. Basically, you have raised two issues. One is, I mean, how the digital channels are being used for purveying credit. This is one aspect. And secondly, what are the collaborative models, and especially with regard to co-lending. And I will take it, I mean, again, looking at the issues. Okay, basically, the challenges faced in terms of reach out to the customers, in terms of risk management, and in terms of operational efficiency. These are three, I mean, areas I would like to take. And within that, okay, what are supply side issues and what are demand side issues? Because most, I mean, we talk mainly from the supply side of the credit. And as Shah Saab was telling that, okay, there is a huge demand and banks are not able to, I mean, meet that demand. We find that, okay, we are always ready with, I mean, money, where are the takers? And that's the, I mean, thing. I think Chetan sir, you were raising hand. You wanted to say anything?
Sir, Dr. साहब आपका unmute कर लीजिए, please. Unmute Dr. साहब कीजिए, please. Tell the
See,
question.
what I was saying, Ashok ji, ki banks have surplus funds.
Yeah.
The borrowers also need the money, but they are not able to create the proper match
Yeah, matchmaking is not happening. Yeah.
because of the limitations which I said.
Yeah. So from that limitation side, sir, I will especially talk from the supply side limitations. One, of course, I mean, the technology and data has now started helping it in a big way for extending outreach. I mean, many processes are getting digitalized, where assessment is being done digitally. This is one aspect. Even reach out up to the customer level, that is happening. And data is being used for, I mean, assessment of credit as well as risk management, even up to the collection level. So that is how data is being used. Simultaneously, RBI for last and government also, there had been a lot of emphasis in terms of how, I mean, besides brick and mortar model, how banks can extend their outreach. And that is where basically I can say, especially unbanked area, Gupta Sahab has taken name. So in unbanked area, that is where BC models are happening. A lot of banking correspondence, through banking correspondence, banks are able to reach out to underbanked or unbanked areas. Third thing, I mean, we can say, I mean, a lot of DSCs, even NBFCs, the entire ecosystem of NBFCs are being used for extending credit to MSMEs, especially. But issues are there. I mean, again, I would say, I mean, what we are facing as a banker, that mainly issues are on the demand side, both in terms of, as you rightly told, that, okay, management and financial literacy you have to, I mean, told, and two specific demand side interventions have been, are being made by the banks. One is in terms of providing financial literacy to clients, and second is, I mean, skill training. I mean, so, I mean, lot of skill gap is also there, especially in underbanked and unbanked areas, and where banks are providing skill training. Also, they are partnering with various partners for giving skill training. So these demand side interventions are also being made. But larger challenge, what, okay, on supply side, adoption of digital technologies is very fast. Banks are investing huge sum of money in adopting newer and newer technologies. but for using that digital technology at client level, that is emerging as a big challenge, and especially in smaller MSMEs and MSMEs in rural and semi-urban areas. That is coming as a big challenge, because digital adoption at the client level also, it is inhibiting in terms of digital penetration. So that is one thing coming. But having said that, I should say a lot of progress has been made. If we take today's, let me take my bank. Entire Mudra journey is being digitally, entire Mudra loans are being digitally underwritten on daily basis. Around 4,000 Mudra loans are being pervaded digitally. Entire PM Swanidhi, you took the name PM Swanidhi, is entirely digitalized. That is how everything is happening at the digital level. So right from underwriting to risk assessment, and maybe largely even at the collection level, digital channels are being used. Finally, coming to the co-lending, of course, this again has come as a big support for traditional banks to extend their outreach to MSME customers through their co-lending partners, whereby their physical reach, sometimes their digital reach is also being utilized in a way to reach out to the people. And good number of, I think, good credit books are being created in various PSU banks through this co-lending manner. I should say few flag issues I would like to flag at initial level itself, especially in terms of collaborative models. Many a times, the partners in their I should say keenness to grow their books, many a times the risk aspects are compromised. There are certain lending practices which is not good for system as a whole in long term, or maybe especially from the financial stability point of view, those could be issues in time to come. And since it is a very, very highly competitive area, banking and financial services especially. So what happens that, okay, initial phases, people overlook those items, and that can become a pain point in time to come. So that's my thought on digital adoption. Using digital technologies or digital channel in terms of purveying credit, and as far as collaborative models in co-lending is concerned. Yeah.
Very nicely, sir. Pathak sir, you have covered. Lekin I must give you, I think, appreciation, congratulations that all the Mundra loan your bank had digitalized. I think this is a major aspect. So Bank of India recorded clapping that such things has happened in your bank. So further you have mentioned lending practices. I think this is also major aspect. Sir, rating play important role for SME sector. Whether your bank is insisting for rating for the SME sector, because investment grade, to get a investment grade rating for a lending practices is very, very difficult. Another aspect is whether social responsibility, social credit score can be given to the SME sector so that rating can be improved. Because this is a major aspect. One of the question is also available where they are telling they have no rating. So banker refuse to discount the bill for the SME sector. Have any view on that, Mr. Pathak?
Yeah, thanks, sir. So I will again respond to your question, and I will start especially from social credit system. So, okay, this is one system, I think many of you may be knowing that, okay, this was started in China, social credit system, and through
Yes. sir.
Through that, they started, controlling many things.
Yes, very nice.
And okay, in its current form, or maybe in its current name, I should say it was started in China. But as you are a veteran banker, Parit Saab is also a veteran banker, seasoned banker. जब डे वन से हम लोग ज्वाइन किए थे तो बोला जाता था कि वो आपको 3 चीज टेस्ट करनी, कैरेक्टर, कैपेसिटी एंड कैपिटल.
Yeah, right.
So character was always a part of, our credit assessment. So, and it was nothing but, basically, social credit. I should say it was nothing but a aspect of social credit. And we used to, I worked in northern area, so there used to be, okay, there were people who used to take pride कि साहब एक बार जबान दे दिया तो बस पीछे नहीं हटना, जो चाहे कुछ भी हो जाए हम आपके क्रेडिट जो है निश्चित रूप से देंगे. एंड दे यूज्ड टू, रामचरितमानस की एक लाइन होती थी साहब, जो कुल रीत सदा चलाए प्राण जाए
वचन ना जाए.
एक बार वचन दे दिया तो
Very nice, very nice.
so that used to be, the point is कि okay, the aspect of social credit, it has always been a part of our assessment. Now coming to next thing, okay, if we take credit risk, there are two aspects. One is capacity to repay and second is willingness to repay. So social credit, I should say, it addresses only the willingness to repay. That aspect it basically addresses. Capacity to repay aspect, probably social credit, I don't think, it addresses. Thirdly, I would say that the challenge with complete, suppose social credit aspect is completely embedded in our system, or I should say as a objective, it should be there, but it should not be very insidious. Whereby your privacy rights are compromised, your individual rights are compromised, where you ultimately enter into a surveillance state, or maybe Orwellian state, where everything is being monitored, what I am eating, how to whom I am marrying, where I am going, everything is being monitored. And that is how probably this was one of the bigger criticism. I think one of the important criticism of what is happening in China, because they have linked everything through social credit system. Even there were travel restrictions, their visa, their foreign travel, everything is linked to social credit system, and it was many aspects. So that's my take on that is okay, it is a very good thing, but with caution. Only those parameters who really affect the financial behavior of the person, that should be taken into account. In order or in a direction to do that, unnecessarily we should not create a surveillance state, or we should not end up into a dystopian or Orwellian state. That's my caution on that one.
Very nice.
So this is on this thing, sir. As far as the credit score is concerned, for any financial system to I think to work efficiently and to create trust in the financial system, we should have a scoring system, because that is the way to bring credit culture, where risk is priced properly, where suppose proper the credit behavior is not only priced, it is rewarded or maybe punished if required. So that is scoring, it is required. Now scoring, we can build a model. I can understand the challenge from where you are coming, that okay, many of the smaller units may not have that kind of data or accounting system, where we we are able to create a very I can say objective scoring model. But banks have developed, and this is a regulatory mandate also, and rightfully so, I should say, the regulatory mandate that okay, above 10 lakh any credit, their banks should have a scoring model. In fact, RBI has now started telling that even for a smaller loans also, you should have a scoring model. Let it be a very, a scorecard model or whatever, but there should be a scoring model, and based on that, your credit result should take. To make it objective, I think credit scoring system is something that should be end state or future desired state where we should move. That's my point on this.
Very nicely, Ashok Pathak sir. Ashok Pathak, have anything? Ashok Pathak sir, thank you very much for scoring model. Lekin for the SME sector, which are no books, they're nothing. Once you sanction a limit, working capital limit, as question of the one of the person is there, so bank is not discounting the bills. Even working capital limits are available with the party. So discounting should not be any problem. I think it is very beneficial for the banker also to get a bill discounted within the overall limit of the working capital. I think that is my suggestion. I think for a scoring model also, usually we can take some score for a social responsibility. If you can rework out the model, that we can also suggest to the government, and we are also writing to the ministry and also to the Reserve Bank of India, whether this matter can be taken into consideration so that gap can be properly met with. Mr. Pathak, any view on the credit gap, how it can be narrowed down? Anything?
Yes, sir. I think okay, that's the only thing. These are the, if you are able to, as I started in the beginning itself, we are able to address them both on issues from the supply side as well as from the demand side. We are able to create an environment of trust. That is, I think the most important thing. I don't think there is any dearth of finance, and I think greater and greater amount of credit can be given to MSME sectors.
Thank you very much, sir. Thank you very
Thank
much.
you.
There is no dearth of the funds. Even it can be provided to a needy person. If you are needing the person, your business growth is available. I think there is no dearth of the funds. Now I'm coming to Shri Rajesh Kumar Singh, General Manager, Bank of Maharashtra. Dr. Farid has mentioned, sir, instead of the assets-based lending, we should have a cash flow lending. What is your view, sir, for cash flow lending? Mr. Singh.
Good evening, my co-panelist, Dr. Farid, Dr. Chaitanya sir, and Dr. Kudazi, and my colleague from Bank of India, Mr. Ashok. Dr. Farid has really put one of the emerging area in funding, that is cash flow based funding, and the example that he has given is the threats. And that is especially for the MSME sector. And cash flow based funding is very convenient that way. That is the future, actually, that way we can see, especially in managing the working capital. Because this are discounted on tax platform, and that is for MSME sector, but other sectors also now it is happening. Any of the corporates, may it be from their supply side, procurement side, and the sales side, both. I mean to say, the dealer funding as well as the vendor funding, both can be funded through this supply chain funding, not only on its platform, but now several other platforms are coming up, wherein most of the suppliers and the vendors, the dealers are MSMEs. They are supplying to basically big corporates, manufacturing units, maybe services units, and those can be discounted, and they are discounted. And one thing, somewhere you mentioned there is a requirement for credit rating, or that even for MSMEs to get discounted on that platform. But I think is that in that case, exposure is mostly on that buyers, that their credit rating is more important than the MSME ratings, MSME suppliers rating or the vendors rating, wherein their bills are discounted based on the guarantee of that buyer. That aspect is not very essential for the MSMEs to get rated, but of course, every bank has their internal rating system, wherein they rate before taking any exposure. Internal credit means there. External credit rating, every bank has their own cutoff. 25 crores, 50 crores, maybe even 100 crores. Supply chain and now with India, one of the very good public infra is coming up, financial infra is coming up. In that, various fintechs are coming up, and they are coming up very innovative products wherein they are supplying this funding based on the cash flow. And the cash flow they are just seeing mostly maybe on the GST returns, maybe that POS machines, whatever input is sale is coming, or maybe e-commerce based transactions, whatever it is happening. So they are able to just see what is the cash flow of that particular unit, and based on that, they are able to fund that. And in cash flow based funding, nowadays, this available digital platforms, now it is also possible to ring-fence those cash flows, and based on that, they can be funded, and there is the requirement of that, what we can say, collateral. One of the impediment in funding to MSMEs. That impediment can also we can overcome through this cash flow based funding. And banks, so far as banks are concerned, traditional banks were mostly going for trades and other even non-MSME discounting systems. But now these fintechs, they are coming up and they are doing a lot of work in that area in digital lending based on cash flow. And I think that is the future of the finance in that way, that without going for much brick and mortar infrastructure, instant digital that can be funded. And the credit gap, what you told, around 26, 27 lakh crores gap is there in MSME sector. And I think this is one area where at least this working capital fund that can be done. And banks are mostly funding, are establishing the infrastructures and that units also. And that is, every bank is open for that. And a lot of scheme government is there for that. Banks are still there. Every bank has got a trust area for lending to MSME sector. And this way, I think this gap can be bridged for MSMEs. Though it will take time because our country is gradually we are coming up. The prospect is very good. I think in the coming time, this gap, financial institutions will be able to do this.
Mr. Singh, I think you are rightly touched about the cash flow lending. Your bank can give a cash flow lending. My only point is, when we are talking about a sugar industry, where the net working capital is minus, there's no margin with these people. Still, I'm just coming to that point where cash flow lending is there since long on the basis of the projection of the sale, revenue and income. What is the deficit will be there that are being financed by the banker for the sugar industry? That is a cash flow lending. Instead of putting your second method of lending, first method of lending, you say net working capital is not there and margin is not available. Whether such concept on the basis of the cash flow, surplus or minus, that lending is possible in the banking sector. That is the major point. And that too, without the collateral security, as is being done for a sugar industry. Have any view in that, Mr. Singh?
Yes. Of course, in sugar industry, this peak and non-peak credit and cash flow that was already there. Banks were following that. But in all industries, that kind of arrangement is done based on the tradition, based on the type of that industry that is being done for that. But that is for a sector specific. You are telling about sugar industry. But I'm
Yeah,
talking about in
I'm not
general.
talking,
But
I'm not talking about that. I'm just talking, giving you an example for that. Instead of going for the assets and liability working capital gap, only basis of the cash flow submission by the SME sector, whether bank can lend. That is the point. Not for the, that is a cash flow lending. Instead
yes,
of
yes, yes.
talking
So
about
that is
the,
a lending
yes.
based on assets and calculation method of calculating MPBF. But
Yes. That I'm talking about that.
yes, yes. So besides that, this balance sheet based funding, cash flow based funding, see, just like I gave the example of supplying, say, suppliers, MSMEs are supplying to bigger corporates. They are supplying and they're submitting the bills. That is that we are discounting without taking any their balance sheet or any of their other traditional method of funding, that we are not adopting in that. In that only based on the credit risk on the buyer and based on the buyer's some major assessment that is being done. So that way, this gap is better than working capital based on cash flow. Because since he may be a supplier, he supplied, cash flow is assured, or he may be a dealer. It also is assured that way. And in this model, not much needed for traditional assessment or traditional collateral or anything.
Thank you very much. Another point is compliance. For SME sector, compliance is a major problem because you are asking every month stock statement should be given. Even certain banks are asking a QAS, quarterly information system should be there. I think it will be dispensed with in so many banks. And inspection, there are so many compliance. Have any view for the compliance? What compliance should be there? So that proper
Yes.
monitoring of account can be available with the banking sector. Have any view on that compliance, Mr. Singh?
Yes. Compliance, in our country, a lot of compliance MSME face not only from bank side, but a lot from maybe so many licenses, right from their inception to monthly, quarterly compliances. So many things they have to do for all short of maybe government departments.
Okay, sir. It's regarding the bridging the gap, what we are talking about from the beginning. Have any suggestion from your side? How the credit
Things
gap
that-
can be bridged?
But for the banks,
Yes, for the bank, how the bank can be helpful to SME sector?
they're nominally taking
Hanji, sir?
the
Sir. Have any view on that, Mr. Singh? How to bridge a gap of the credit? I think we are not getting you. No problem. We will come back to you again if possible. There is one question which we are asking, and now the two questions are there. So first question which we already touched while talking to Ashok Pathak, that some of the customer had this is a Shiv Prasad. Some of the customer are supplying the goods to SME who may not be having external rating once. Hence, the banks are refusing to discount these bills. Are there any lender who can discount such SME bill? Have any view from any person?
I'll take, sir.
Please, please.
See, sir, and I think just the benefit of the audience and the question from where it has come. External rating is not mandatory in all cases. It is only in cases in most of the banks, I should say, it is above 50 crore limits. Where lending is more than 50 crores, then only external credit ratings are made mandatory. And I think 99.5% of MSMEs come below that. So that is not a big issue. And if any MSME is having limit beyond 50 crores, I think they should get rated. It's a fair to have a rating for them, because that's how some independent evaluation of their business model, their financials, and their management and their industry, everything comes into that external rating. So I think that would be fair for limits beyond 50 crore. Below 50 crore, it is not mandatory.
So I think, Pathak sir, you explained very nicely. Like, my point is, once you are having a working capital limit with the bank, that bank can discount your bill. Instead of, if you are not taking any limit from any banking sector, if you still want to discount the bill, definitely you have to approach the bank and give your credential. And this is, I think there should not be any problem for that, what you mentioned. Then Sunil Batra sir mentioned in the compliance may be carried out by the field officer themselves. Banks may, in this way, also mentor them. I think this compliance is done by the field officer. And Mr. Apna Singh Saab?
Compliance, see, compliance is not done. The credit officer visiting the unit, they only confirm the what is the stock
Right,
level,
right.
actually they're running or what. The actual status of the unit, for that confirmation they visit. That is not a compliance, and that is a means just for comfort of the bank is doing that. For compliance, definitely
Actually, the
some kind
inspection,
of submissions
inspection,
has to make. Inspection
compliance,
is one of the
that will have to be carried out by the bank. The bank should be satisfied what are the
yes.
securities we have mentioned, that is intact. And the fund which has been released by the bank is used for that purpose only. I think
Yes, it is a
that
compulsory process for every
it
bank.
is, it is a compulsory for every bank.
Yes,
And
yes.
SME sector should not afraid for that. If they are done it, compliance is mandatory. It should be done. I think there is no other question. Now we're coming to end of this seminar, this webinar. So I am asking one short question, short reply. What is your suggestion to our listeners? So I'm first coming to Dr. Sir, who is my mentor. Any suggestion to our entrepreneurs, sir, and who are listening to you? Even bankers are there in this webinar who want your guidance or your felt experience. Anything you want to suggest them at the end, Dr. Farid Ahmed, sir. Unmute कीजिए sir, unmute कर लीजिए.
From the entrepreneur side, they should improve by attending to the training programs, entrepreneurship, because, and also they have to focus on the marketing. Because by forming the clusters, marketing is can be improved, and they can negotiate for a better terms, either for the raw material purchase or the selling purpose. But from the banking side, as Pathak ji was telling, the trust is very, very important, because most of the MSMEs are the micro enterprises. Their loan requirement will be less. They are not in a position of giving the collateral securities. In such circumstances, what plays very important role is the trust between the banker at the field level and the MSME. At the head office level, at the zonal office level, the top executives may give a call for financing for the MSMEs without collateral securities. But the field level, the managers may not be willing to give because of the lack of trust. So that has to be built by the entrepreneurs along with the bank staff. So building the trust is very, very important. And second thing is, as only 16 or 14% of the MSMEs are only covered by the formal financing, it is not at all possible in Indian circumstances to meet the gap by the commercial banks themselves. So it is very much required need of the hour is a co-lending, co-origination and collaboration of fintechs, NBFCs and the banking sector. Then only the MSMEs can be supported in a better way for contributing to the economic growth of the country. That is
Very nice, sir. Now coming to Dr. Chaitanya Shah. Sir, your view, sir?
My view is like this, two things. One, they must build credibility based on performance, all lenders. Second thing, as a rejoinder to what Mr. Pathak said, I had done recently one episode on YouTube on credit rating. Credit rating is an excellent diagnostic report of the SME. It would give them a very clear picture as to, for their growth model, what are the areas where they are lacking. And this is what most of the SMEs who are really looking for a rapid growth or something, which they really feel that, they can do, they should go for credit rating. And the first one, build credibility based on 3 C's, what Mr. Pathak said, and show your performance.
Very nice. 3 C is important, Pathak, sir.
Yes.
When we enter in a bank, we told them 3 C's, 3 C should be observed strictly. And there was also some scheme where the Free sir mentioned entrepreneur development program. I think some banks have started for giving a training to the SME sector also in their lead district. I think if that is enforced with the banking sector, it can be useful for the SME sector. Besides that, NSE or other institutions, when we are talking about, they are also giving a training. I think they can attend it. KYC, other things, they are also giving a proper training for that. So now I'm coming to Shri Ashok Pathak, sir. Sir, your last word, sir.
Yeah, sir, I will also take just cue from what Dr. Farid sir has told and Dr. Chetan has told. I mean, both very, very important words which they have used, trust and credibility. So I will just emphasize on the instrumentality of that, okay, how you can, I mean, rather demonstrate your trust and credibility to the banker. Just one thing, use the money for what you have been given the money.
Sir.
Yeah, I mean, that's one assurance. If your banker gets, I mean, number one, you get his trust. And even if after that, if you fail, that is something, fail in a very equitable way, in a fair way. That's the only thing. I mean, bankers are not, I mean, not at all concerned about your failure. That is something, it is a part of life, it is taken.
Sir.
But just fail in a equitable and fair manner. That's the only thing.
Another point I can suggest, that whatever sale proceeds are there, that should be deposited with the bank.
True.
I think if they know your transaction is not there, if you are doing all cash or something, now GST has come. There's no point for any cash or something like that. So all the sale proceeds should be deposited with the bank and withdraw from the bank as per your requirement. I think this is addition to Ashok Pathak, sir, what you are mentioning here. So now I'm coming to Rajesh Kumar Singh. Sir, your last view, sir, from your side, sir. Anything you want to suggest, sir? Mr. Singh? Mr. Singh? Hello? Rajesh Singh, sir. You are available, sir?
I think
It
got
is disconnected,
disconnected.
sir. It is
So
disconnected.
now I am ending the session with my lot of gratitude, thankful, and so not to Dr. Farid Ahmed, who is being considered as my philosopher and guide. Any difficulty, I'm talking to him. And sometime he drafting agenda also. He telling me, Gupta, you do this webinar, that webinar. I think he's very useful for me. And also blessing is also there. Even by message, he's ready to come to bless us. I'm thankful to sir.
Thank you. Thank
No
you.
word to express my gratitude, sir. I'm also thankful to Dr. Chetan Shah, sir. who is also like that, who is also coming, also is very busy for today. Still, he Tene Gupta, once you call me, I will definitely come. And I must talk in a free manner, in the practical aspects. I'm thankful to Mr. Shah for your great thoughts you have given to us regarding management skill, what you're talking about, and you're talking about other thing, which will be, I feel, it is beneficial for the entrepreneur, for the even for the bankers also, who are listening to this thing. I'm also thankful to Shri Ashok Pathak sir, who also obliged us by attending this webinar. So we are also thinking, by talking to MD and I'm talking to ED of the Bank of India, they are also interested to have this type of program as a custom meet for SME sector. I think that we will also going to come for that sector also in Bank of India. I'm also thankful to Mr. Singh. I think I have no word to express my gratitude toward Mr. Singh also. Even once I talked to him, he said, Gupta, okay, once a year that I should come and give my thoughts to that. And Bank of Maharashtra, we are also organizing one physical conference for the SME sector. So there are banks, even MD, ED, and GMs, and even the banking sector, the Bank of Maharashtra are a pioneer bank. Either you're talking about the growth sector, NPA reduction, or something like that. Bank of Maharashtra done an excellent job under all the parameters of the banking sector. I must congratulate their management and Mr. Singh for doing an excellent job for the banking sector. I think that is the point. Now we should see for the physical conference for the SME sector, which Mr. Singh had taken an initiative after his joining as SME General Manager. So I'm thankful to Mr. Pandya sir also, and their Rajiv sir also, who is also blessing me. Anytime I can step in his room, and he is also listening to me. I'm thankful to the banking of the Bank of Maharashtra also.
Thank you. Thank you.
Thank you.
Thank you very much, sir. I'm thankful to my team who is off screen. Without that, I think such webinar is not possible. We have no time for that. Even they are arranged so many meeting, talking to the people, and see that maximum registration should be there. As they have mentioned, they informed to me the 1,100 registration there beside the YouTube and other electronic media. I really, we are getting a very good feedback from the participant also. I'm requesting all the participants, give your free and fair views regarding this panel, because this panel is a maximum very good panel, very knowledgeable panel. All people are talking in a practical manner, not in a bookish or a internet or taking something like that. I'm thankful to my off-screen people like Mr. Rohan, Lokesh, Joginder, and above all, Mr. Chaudhary, who is our writer, who is writing so many knowledge report. Today, we also webinar of the SOCHM, which subject we are not knowing at all. I'm telling you, we are the finance person. Their webinar of the fortifications. So where the minister was also available. When I am talking to them, so they are feeling they are talking to me, whether you are expert, you are a doctor, or you are expert in the nutritions or something like that. Because I not know anything. Because Mr. Chaudhary has prepared such a knowledge report and such a feedback to me. So what I will to talk to in an ordinance where I think more than 500 people were there in the hotel, and they are appreciated the research in India as a knowledge partner for that. I'm thankful to Mr. Chaudhary. At the end, I'm just telling you, research in India, we are a merchant banker, we are an investment banker, we are having a syndication of the loan, we are also conducting technical viability study for the bank. We are also preparing DPR. We are giving training to the bankers, to the PSU in a different aspect. We are also in insolvency. We are doing a valuation also, whether you're talking about the assets valuation or you're talking about the enterprise valuations. And we are also government advisory services. So many beings are with us. So with your blessing, we come up within a period of 15 or 16 years after my retirement. I think we are the one of the leading financial consultants in the industry. So because we are believing in expertise, we are believing in the ethics, and we are not doing anything wrong from our side. Once we are sponsoring any proposal to the bank, we see that it is bankable proposals. And I am happy to announce that nowadays a single account had turned to be NPA, while we are doing more than 200 crore rupees every month. That is the strength of the research in India that I want to tell you. Lastly, I'm thankful to all my eminent speakers, all my participants, all the bankers who are attending it. Thank you, all the member of my association, which I told you, the Association for Financial Advisor of India. They are also attending this meeting. So I'm thankful to them also. Thank you very much. I overstretched it. For
Thank
that,
you.
I the excuse.
Thank you, thank you, thank you.
Thank you, Prasad. Thank you so much.
Thank you.
Thank you, sir. Thank you, sir. Thank you very much, sir. Thank you, sir.